Good morning, everyone. This is Mike Minter, Chief Investment Officer with Financial Synergies, and today we're going to jump right into our market in minutes. So this is, of course, looking back on last week, September 25th to the 29th of 2023. So let's jump into what happened and a little bit as to why. Okay. So last week on Wall Street, so a down week. And this is unfortunately closes out a pretty rough September. So we've got our hair pulling here, just typical of September, unfortunately. There's a lot of theories as to why September historically is so bad for stocks. Traders come back from their vacations in the Hamptons and they're raring to go. Volume picks up and it tends to be pretty volatile in general, but more often than not, it's down. Unfortunately, not always, but a lot of times it's down. It did not disappoint in terms of its ongoing reputation, unfortunately. So we had a pretty down week across the board. And Nasdaq was a little bit of a bright spot. It's actually flat, but in general, pretty tough. So the good news is that we are still in very good shape for the year. And, leading into October, November, December, which are historically pretty good months, more often than not. So if we end, positive there, we'll still have a very, very strong year. So good news on that front. So let's jump into a little bit of why, what happened last week happened, and we'll get into some economic stuff too. So stocks really kind of followed the bond market. So it was kind of all about yields, which has been kind of the ongoing story this year. So the bond market drove stock prices last week. So investors were fretting about, these rising bond yields. So after beginning the week with small gains, unfortunately stocks declined amid weak housing data and a decline in consumer confidence. However, it was the jump in bond yields which sent the 10-year Treasury yield to a 15-year high. And that may have been, contributing the most to this undermined investor sentiment. So stocks did rally on a pause in bond yields that extended into Friday. And that was based on a positive core personal consumption expenditures. That's a long one, but that's PCE report. In this, PCE is the Fed's preferred inflation gauge. And but the rally did fade as traders kind of fixated on a government shutdown. But that was a positive news for the week. This core personal consumption. So we had kind of this mixed data on Wall Street last week. But unfortunately, this government shutdown kind of reared its head again, and so that did impact things. All right, so let's get into the economic signals, and they were mixed as we just discussed. So amid signs of a labor market cooling, last Thursday's initial jobless claims report showed only a slight increase of 204,000. This is positive. So that was the second lowest reading since January and below expectations of 215,000. So again, positive sign for possibly inflation cooling. Again, we want to see a strong labor market in a sense, but also we want to see that cooling because you really can't bring down inflation unless you have a somewhat of a tame job market, so labor market. So it does seem to be moving in the right direction there. Final estimate of second quarter GDP was released, indicating 2.1 annualized growth rate, and that was unchanged from the previous estimate. So good news there. So beneath the headline number was, and this is where it gets mixed, consumer spending was cut to 0.8% from its earlier estimate of 1.7. So a little worrisome, this revision, since let's face it, consumer spending is kind of that is the beast, the engine of the U.S. economy. So mixed, but not all bad by any means. So let's look at what's on deck for this week. So we have some key economic data coming in here on the left. We have our Institute for Supply Management Manufacturing Index today. Tuesday, job openings and turnover survey Wednesday, automated data processing. So that's the big company, ADP employment report and the Institute for Supply Management Services Index. Thursday, jobless claims, and Friday, employment situation report. Very light on earnings this week. Thursday, Constellation Brands reports, and that is what is up for this week. So that's going to wrap up your market in minutes. I try to keep it as concise as possible. Here is all of our contact information. Please contact us anytime. If you are a client, of course, we are always here for you. Contact us anytime you might need to speak with us or your advisor or anything going on for your financial life. If you're not a client and want to learn more about what we do, please contact us. We would love to talk to you. And so now I will leave you with the favorite part of the entire report, which is disclosures. And that will wrap us up. So guys, I really appreciate it, and we will talk to you again soon, next week at the latest. Thanks, guys.